Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Friday. Good morning. It's the Friday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson, as we are about to do what we do each and every day here on the DMC. Take a look at 10 to 12 futures markets from a breakout and reversal trade opportunity perspective with educational ideas in mind. So let's go ahead and dive right in. So this morning we are up about 4 points in the S&P. Those 4 points that were up in the S&P are kind of paired with a little bit of price rolling over just a smidge. So I think this is actually setting up for a breakout to the upside. This is typically how a breakout to the upside would set up. Now, this is really where we fell yesterday out of this area. This was a supply area that we kind of fell out of yesterday, remembering that anything that we do short in this market environment is a little bit counter trend. Right? It is a little counter trend. Now, full transparency, I actually took a short yesterday as a swing trade. And the short that I took as a swing trade is a spiders put. I went long the spiders put. Well, why would I go long the spiders put? Well, the reason I went long the spiders put is very simple. We are up at a daily level of supply and volatility is super low. So I'm not necessarily net bearish and in any way, far from it. I'm actually bullish in a number of different positions, but it acts as a hedge against some of those other bullish trades. And the reason that you would do that is to just kind of protect some of the longer positions that you may have in play, and that's an interesting way to kind of think about it. So for those of you that are subscribers of TradersArmy.com, we'll talk a little bit about that on the Sunday Night Live Trade Room when we talk about hedging some of our other positions. But as we are for today, I think that we may get a little bit of this is setting up for a decent little breakout above 28.90. And so I think that if you get that area there, now if you do take that breakout, your stop still has to go below 28.80 because this is my last pivot. Remember, stops have to go below pivots of breakout trades on an entry time frame, right? So we're going above this tweezer top area here. It would be what we're looking for, and it would be in this region. You may get an opportunity on a pullback into one of these areas, but until then, that would be the area to look at. In the Nasdaq yesterday, we came back. Our NQ level came right back to our entry. This is the level that we talked about in the daily market commentary. So leave me a comment down below if you were able to catch that Nasdaq long. That's exactly where price we believe that it was kind of heading to. Now the Nasdaq is still a bit weaker than the S&P. The S&P is close to its tweezer top highs. The Nasdaq is not quite there yet, so the S&P is actually the stronger market right now, and that would be the one that's a better opportunity on the breakout. Crude oil, you're looking for a pullback. This region here, this 60.97 by 61.17 is still the area for a bit of a pullback. We are getting some weakness. A lot of people, I heard yesterday were taking shorts in crude. I'm still not willing to do it until my 4-hour tells me that I've got some weakness, and I have, now I have a little bit of lower swing low, lower swing high. I'm okay getting short now on a 15-minute rally into a supply area, but until you've shown me that weakness, it really kind of keeps me in check. And so as it stands now, it could be a breakdown out of that area. There's also some opportunity up in this region here. Gold. In gold, we had a really nice breakdown yesterday out of our triangle pattern. So if anybody took that gold short, that worked out really well. I went for a second bite at the apple on a rally back up into this area, this supply area, and price actually came right up to it and went right through it. Matter of fact, went higher than the pivot above it. So this was just enough to make that trade not work, but I'll take that anytime, right? When I can get a really nice run for a profit and then take a really small loss the second time in, I'm okay with that. Now we're starting to continue to fall, and I think that the fall is more likely to continue. And so for today, if you wanted to look at a potential breakdown, I would look below this area here for a potential breakdown for price to continue to fall a little further. Looking at the bonds, the Aussie, and the Euro. So in our bonds, Aussie, and Euro positions, really not a whole lot to cover in these except for the Euro. So the Euro has bounced off of our supply level. And that was a really nice drop away from our supply level, and lo and behold, it's come to our demand level, and we've seen a really nice move out of that demand level. So leave me a comment down below if you're able to catch that supply level and that demand level, because both of them seem to be working pretty effectively. So now I wouldn't take either one a second time in on a limit entry. You'd want to wait for a confirmation entry on both of those. So I'm going to change this style from a limit entry to a confirmation entry, and changing that style up is really going to be what's best for that position. So moving from limit to a confirmation style entry, because they're still valid, because neither one of them got violated. Matter of fact, they were both just touch and go levels, so they may hit and work a second time through. As far as the Canadian dollar, still have our supply level up above and our potential breakdown level right here. We actually have bounced off there a couple of times, so getting a little bit of a base in here. If we break below there, your stop has to go above the pivot, which is right up in this area here. Last but certainly not least, Great British Pound, Japanese Yen. In the Great British Pound, we did come into our pound level that I talked about yesterday. And for the good trades that you have in the Euro, you have this trade in the pound, right? We came into it and it really did a whole lot of nothing, and gave you a real quick stop out. So that's okay. I'm willing to lose those when they happen. And it's a small little area. And then the Japanese yen trade, this is a good opportunity to look at our 6 candle rule, right? So in the Japanese yen trade, we come into the level 1, 2, 3, 4, 5, 6. Price hasn't really gone anywhere after 6 candles. This is when you think about taking your stop and moving it to break even. So if you did get into that Japanese yen trade in the overnight areas and you've not moved your stop yet, I think it's a good opportunity to do so to a break even level. So looking back, at our equity markets, I'm still, obviously more bullish than I am bearish, because we are still in a big picture upward trend. We're basing below this level. So on a breakout, I think the ES is the better trade for a breakout for today overall. But until next time, everybody, I hope you have a great trading day. If there's anything I can do for you, please send me an email, support@tradersarmy.com. Until tomorrow, I will see you soon. Later.